Hello, welcome to this Friday edition of FreightWaves Now. I'm your host, Anthony Smith, and we have a full lineup for you today. Luke Falasca is going to give us a broker update. Andrew Cox is here with us with a DHL Supply Chain Pricing Power Index update. But first, we're going to go to Zach Strickland with Carrier Update, brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Friday Carrier Update presented by PowerFleet. I'm Zach Strickland. So let's close out this week on a strong note. I love giving carriers good news on a Friday to send them on their way to have a good weekend. So truckload volumes continue to increase. We are now over 11,300 on the outbound tender volume index. You're welcome, Mike Benson, for that prediction. I made it happen for you. Tender rejection rates continue to expand at an increasing rate. So tender rejection rates now at 7.48%. Right around 7.5%. But the important factor here with the tender rejection rate is that it is simply increasing at a faster rate, much like what we would expect when you see these kind of volumes pushing through the domestic trucking market right now. So freight volumes should continue to expand. We're entering that traditional peak season in June, where we can anticipate a little bit more tightness. Is the tender rejection rate truly that one-to-one relationship that we saw back in March? No, it's still not there yet, but it does continue to show signs of getting closer and closer to that point where we would see like a 12 to 13% tender rejection rate. Now, I don't know if we're going to get there because we only have a few more weeks to see those volumes in that seasonal pattern. Now, they could exist throughout July, but we're not sure just yet. We'll have to wait and see. So how is this translating into van tender rejection? So I've got the regional tender rejection index for the van sector pulled up here, and you can see clearly that the West Coast is driving a lot of the tightness right now in the market. You've got tender rejection rates out west, 10.15%. Again, the Los Angeles market driving a lot of that. The Southern California really driving a lot of that tightness. Now, if you see this yellow line right here, that is the Southwest region. The Southwest region is comprised of Texas, some of these Oklahoma, that area of the country, and it's starting to tighten up again, potentially due to the fact that a lot of carriers are having a West Coast preference right now. They know that they're going to have consistent volumes out there. Los Angeles has been a very strong market here over the last month or two, but Texas starting to really pick up there. That little pink line down there, that poor Pacific Northwest, if you get up there, you're probably not going to have a lot of luck on the spot market, so definitely pay attention to that one right there. The rest of them kind of falling in line between 6 and 8%. So the Southeast has kind of cooled off a little bit here of late. The Midwest not showing quite as much activity as you would anticipate this time of year, but the Southwest and Western regions really picking up for van. Now reefer, a similar pattern. Southwest here in the purple line, 20.91%. You've got the West region there in blue sitting at 18.86% for reefer tender rejection. So reefer activity in those two sectors, again, just like van, continues to be tight. We see this connection all the time with van and reefer kind of moving hand in hand as that capacity kind of complements each other. So again, the Northeast for reefer, however, unlike the van, is leading the way, or I should say having the bottom end of the tender rejection rate in the United States right now, as it hits right around 4.3%. So reefer carriers should probably avoid the Northeast if they need some sort of spot market help to get out of there. Looking at our weighted rejection index, so again, combining volumes with tender rejection rates in the United States. Houston, Texas. Remember, I was talking about the southwestern corner of the United States. Houston is included in that. You can see over here on the map that dark blue with Dallas and Houston. We were talking about Dallas earlier in the week being a hot spot. You can see Ontario, California, again starting to pick up with tightness. These are your two hot spots in the country if you need some spot market help right now. So let's break down Houston a little bit here. So Houston, what is it doing? You see van tender rejection rates at over 9%, reefer rejection rates over 27%, a very high number out of Houston right now. Volumes not necessarily increasing rapidly. So it's a traditional supply side contraction on that end. Houston is traditionally one of those shorter haul regional markets. And, to look down here at what markets are getting rejected at the highest rates, you've got tweener and long haul and mid haul all leading the way. 23% on tweener, long haul at 11.87%. So again, not your traditional freight moving out of Houston right now. So if any carriers need help on the spot market, they should check it out. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Good morning, everyone. I'm Luke Falasca bringing you another broker update, and happy Friday. We are a little over halfway through the month of June now, so 4th of July is just around the corner. We're going to be looking at a lot of reefer freight today, but first, just to take a look at volume levels, we've got in blue here is overall truckload volume levels. No surprise there, staying within that seasonal pattern that we see, very typical for June. It'll be interesting to see what happens after the 4th of July, if volume levels stay very elevated or they start to go down like they typically do after the 4th of July, very slowly through the rest of summer. Now, in orange right here, we're seeing another little uptick. That is a reefer volume level sitting right about 1531 on the index scale. So we're going to keep an eye on that. Reefer volumes are still very volatile. Some areas are continuing to increase depending on what is being produced in certain areas of the country. For those of you that do move reefer freight, you should be very experienced to that. But first, before we take a look at our map, we'll look at the rejection levels. Overall tender rejection levels are continuing to increase, just shy of 7.5% today, which is very high. We're continuing to push up. It's about 2% higher than where we were this time last year, for reference sake. Now, that green line is also pushing higher, had a slight little dip day over day, but for the most part, it is definitely trending upwards. That is our reefer tender rejection sitting at just under 12.5%, which is looking very, very healthy for the reefer market. If you're moving reefer freight, that's going to tighten up capacity a little bit as that continues to push higher. Now, over here on the map, this is going to be the weekly reefer tender rejection change. So remember, markets in blue are where reefer tender rejections are tightening or going up, and markets in red are where tender rejections are going down for the reefer market, and the markets in white are relatively unchanged, maybe a slight uptick or a slight downtick. So first off, here, pretty much on the West Coast, a lot of red right now. That doesn't mean tender rejections are low, but they are beginning to soften. So if you do move a lot of reefer freight out of southern Arizona or southern California, it is starting to lower. Great opportunity to push your carrier rates down in those areas as the market rates are going down. So you're going to have to push carrier rates down in order to create margins as it continues to soften. Now, also Oregon seeing a lot of downward pressure on prices as well. But there is a little bit of bump here in the Pacific Northwest, particularly Idaho, Washington, Spokane, some of those areas, which we'll take a look at later, which is seeing a little bit of a rise. Also down here, some of Texas, but a lot of the movement right now in reefer tender rejections is coming way down into the southeast. There's Savannah, Macon, northern Florida. So that's where a lot of that produce is coming out right now in that season. So as those tender rejections continue to rise, and especially as volume levels are very heavy there, it's continuing to push those tender rejections up. But first, let's go ahead. We're going to dive here into the Spokane, Washington market. And folks, this is how quickly tender rejections can change. We all know that reefer markets can flip overnight. This is a perfect example of that. So notice in blue, we have the reefer tender rejection change going out of Spokane, Washington, right? Not 2 days ago, we were sitting at right around 2% tender rejections out of Spokane, Washington, to today we're sitting at a little over 10.25%. It flips overnight. This happens all the time. We saw it happen back here all the way back at May and April. It flipped, it went all the way up, and then it drops off a cliff. Very important to know when that happens here. So if you're moving freight out of Spokane, Washington, you're going to really need to increase your spot market rates to your shippers because carriers will ask for that premium. You're going to have to pay for them to protect your margins on the way up to increase your spot market rates. And also it looks like that green line there is that volume level. Saw a little bit of a spike, could potentially be tightening up that capacity and forcing carriers to reject those tenders. So that'll do it for today's broker update.
Welcome to the DHL Supply Chain Pricing Power Index update. I'm here with Andrew Cox. Andrew, what's the latest?
Anthony, we got another 5-point move this week towards the carriers. This marks 7 weeks in a row since that first week of May where we had a low point, a series low of 10. We've just steadily gained. The carriers have continued to kind of claw back some of that pricing power. And really it comes on the back of things that I'm going to echo from Luke and from Zach. The volumes remain elevated. They've ticked up again this week. That's a good sign for carriers. It's good for both parties here, but it's especially good for carriers because it's giving them some options. And we're starting to finally see those options being taken out and rejecting some of those options. And that's in that outbound tender rejection index. Again, as Zach said, the 7.5%, it doesn't mean that much. The point is that it is moving upwards and it's moving up faster than it had been in previous weeks. So that's a really good sign for carriers. And it's really happening all over the country, as they both mentioned. I mean, we've seen a lot of tightness on the West Coast. These colors here, basically anything darker than this FreightWaves blue is indicating a double-digit outbound tender rejection index. So you can see that there is capacity leaving the middle of the country and heading towards the ports, as I saw Zach and JP talk about it on the spot today.
Right, and Andrew, just from all the charts that you just showed us from just now, we have the PPI up to a 40, we have volumes at a high, we have our tender rejections increasing.
Right.
If we weren't in the middle of a pandemic, we would never have known, just given these stats.
No, that's the thing. I mean, I've had a lot of data surprise me over the last few weeks, whether it's consumer spending data or outbound tender volumes. I mean, things are moving on some good cylinders here for the carriers right now. I mean, we're just 6-7 weeks removed from the lowest print in history at 10%, at 10 on the volume, or on the power index. Excuse me. Now we're at 40. I expect us to see a continual grind upwards towards a balanced market. I'm not sure we get towards that full carrier mode because, as the two men before me mentioned, July is typically a softer month. We probably will see some volume fall off there. I don't know how sustainable 11,000 is through the end of the summer, really.
And you hinted towards some actions in July. Expectations or your outlook for the index moving forward?
I'd say the end of July, so that would be about 6 weeks from now. I would expect a balanced market. I think things will cool off a little bit on the volume side. I do think capacity will continue to kind of band up. That's something that we hadn't seen in the previous weeks and something that actually had been surprising us. We had expected capacity to kind of pick up and tighten a little bit faster than it had with that elevated volumes, but that is really what we have seen over the past week. So I expect that to continue through the July 4th holiday, but that will be a big point in the market for us to see if the volumes can stay elevated after that holiday.
And maybe another shot in the dark here, with all these volumes, all this activity, are you thinking this is a lot from the consumer side of the economy or more manufacturing?
Well, I mean, I think a little bit of both play here. If we look at the Rust Belt area of the country, the Michigan and the Ohio's, we're seeing good volumes out of there, and I think that has a lot to do with the automotive industry getting back online. But the industrial production numbers that we saw from the government just this week, you know, it's still very depressed. Things have stabilized at a lower level. They remain low, but the consumer's spending a lot of money right now. We saw year-over-year spending only down 6% in May. That is surprising to me. I think that's really good. Again, that end of July, when the money runs out from the government, we'll see if that will continue. But for right now, the things are being propped up, and I think a lot of this is consumers, for sure.
Excellent. Andrew, and where can we find more of you and your team?
Yeah, you can go to freightwaves.com/passport for all the latest. We put out multiple reports a week. JP's team just put out one on UPS just yesterday.
Excellent. Andrew, thank you so much, and thank you so much for tuning in. That's going to do it for this DHL Supply Chain Pricing Power Index update. Be sure to tune in next week for all the latest. And that's going to wrap up this Friday edition of FreightWaves Now. Thank you so much for tuning in. The content doesn't stop here. We're always streaming around the clock. So check out our FreightWaves TV app and all your favorite streaming platforms like Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.